Congratulations! You found the Pirls Stock Market Commentary for Sunday, August 23rd, 2015. Market breadth. With this past week's historic market decline, our bull-bear point and figure ratio fell from 0.52 to 0.25, falling markedly further into bearish territory. The total count of securities in bullish or bearish patterns rose 10% to 3,520. The count of bearish stocks increased 35%, while the count of stocks in bullish patterns decreased 35%. The Pirls PNF Market Breadth Summary Chart shows us a market now 13 consecutive weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 135 points for the 17th decline in 29 weeks. At a negative 677.71 points, it continues below all 9 tops above plus 100, below the February 2015 bottom, the April 2014 bottom, has broken below the May 2014 bottom, and continues above only one remaining bottom, October 2014, below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 3 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. The CCI 20 daily, in a Woody's downtrend begun a week ago, has fallen dramatically to minus 364.03. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 57 weeks ago, while the daily CCI 20 began a Woody's downtrend 1 week ago. The CCI 20 weekly declined dramatically from minus 3.97 to minus 239.2. and now has 2 consecutive weeks below zero. Industry rotation the last 2 weeks. Only 2 of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish S&P Retail continues in the top 5. REITs has entered the top 5. Oil Services leads the bottom 5. Bearish brokers, disk drives, and semis continue in the bottom 5. Gold and silver continues to lead the top 5. Focus this week from www.zerohedge.com by Tyler Durden. Why it really all comes down to the death of the Petrodollar gives us the big picture of the end of an era that we now see taking place in the markets. Some key points and charts follow. The world seems to have underestimated how structurally important collapsing crude prices are to global finance. For years, producers funneled their dollar proceeds into USD assets, providing a perpetual source of liquidity, boosting the financial strength of the reserve currency, leading to even higher asset prices and even more USD-denominated purchases and so forth, in a virtuous, especially if one held US-denominated assets and printed US currency, loop. That all came to an abrupt, if quiet, end last year. Suddenly, the flow of petrodollars was set to dry up, and FX reserves across commodity-producing countries were poised to come under increased pressure. For the first time in decades, exported petrodollar capital turned negative. Kazakhstan's move to float the tenge is but the beginning, and indeed Kazakh Prime Minister Karim Masimov told Bloomberg on Saturday that the world has entered, quote, a new era, end quote, and that soon any and all petrocurrency dollar pegs are set to fall like dominoes. The big picture takeaway is that the world is now beginning to feel the impact of the petrodollar's quiet demise, and this is only the beginning. The implications of reduced recycled petrodollars has significant ramifications for financial markets, loan markets, and treasury yields. In fact, EM energy exporters will post their first net drain on global capital in 18 years. Oil and gas exporting EMs account for 26% of total EM GDP and 21% of external bonds. For these economies, the impact will be on lost fiscal revenue, lost GDP growth, and the contribution to reserves of oil and gas-related export receipts. Together, these will have a significant effect on sustainability and liquidity ratios. Santu Pirls comment, and that spells global deflation. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary, featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you have a wise and effective strategy for weathering the coming days, and wishing you true success.